What's up, everybody? Welcome back to another episode of Mass Market. Thank y'all very much for tuning in super late. Let me get the mic straight. Let me get a few things together, man, and then we'll get kicked off. Kind of give you our update, what we think is going to happen with the market. We finally got that break to the downside that we've been talking about. We didn't want to see it, but we finally got the break to the downside. So we're going to talk about where we're at, where we could be heading here in the next week. And, hopefully we got some good news for you tonight, man. So give me a few minutes, man. Let me get this set up off the YouTube, man, and then we'll get kicked off. Good to see everybody in the chat tonight. What's up, Satoshi, Yoshi, Rick, Travis? What's happening? Doors R Us. What's happening, bro? Crypto Joey with the golden star. Appreciate you very much, man. So let me get this set up, guys, and then we'll get rocking. Hopefully y'all had a good week, man, with your trading. Hopefully the stock market treated you well. It was a pretty shitty end to the week. Crypto doing the same freaking thing over the weekend. So we're going to touch base, man. So if you got any cryptos you want me to go over, please feel free to drop them here in the chat. We'll make sure to hop on that. Just give me a few more seconds and I'll have everything ready to go. We're going to talk about some Doge tonight, man. So, let me get this, save this, and then we'll get kicked off. Alright, so guys, what the fuck happened over the past couple days? We had the Fed Jackson Hole meeting. We might play that clip for y'all tonight just to kind of touch base on what Jerome Powell exactly said in there, which it wasn't too good. Pretty much put a dim on the way the market is right now. Sorry, I'm getting my audio straight. But pretty much led to this drop that we're pretty much seeing right here. And this is the 4-hour chart. That's that ascending level of support that we had drawn. Got a hard break to the downside off that Jackson Hole meeting. And took a pretty good fall all the way from 21.5 all the way to 19.820. We're currently trading just above 20,000, which we told y'all would be a key psychological level for us to maintain. We also got Ethereum, 14.95, just under 1,500. So the two big dogs of the market, that's the ones we're watching pretty closely right now. What they're going to do, man, is still looking bearish. So we're going to go over some price targets. I don't have nothing popped underneath here, but for this ascending level of support, we're going to X that out, guys. That's actually done with. That's gone. It played through to the downside like we warned you. So where are we actually heading next? So currently our low was, let me move this, 19.803, it looks like. 19.820 was the low off the day. Actually catching a little bit micro support right there. What I'm looking for next stopping point is going to be somewhere around 18.8. So that's what you're going to want to put off your charts. 18.8. That's the level you're going to be want to watch for a potential drop to, because you could end up getting a little rebound here, stay above 20,000, but you are retesting it right now as we speak. So I'm still expecting some more downside, guys. Not too much happening in the markets right now. I still think we'll have a little bit of droppage over the period of Sunday heading into Monday. Not a lot of volume kicking in. Let's go ahead and look at our indicators real quick and kind of see where everything's at. Kind of get an idea. Off the 4-hour, yeah, we're really super oversold right now, 25. So that's coming in really low for Bitcoin. You can see last time we kind of hovered around, we got as low as 13 off this dip here. And then we ran all the way up to 54. So, but that was a price difference of 21.1 to 21.8. So yeah, you could see a little bit of rally, maybe back up to 20,750, which was that key level that we needed to hold. You can see that big candle right here, and then we just dropped right after that. So just remember, guys, we told you about the golden cross, death cross that was inbound. Dollar keeps going up, so we're having some issues right now in the crypto space. And now we're flirting with 20K. Probably gonna, by the time I wake up in the morning, I'm fully expecting Bitcoin to be below 20,000 and maybe treating it as resistance right now. So That's what I'm looking for, man. That we tried to give you an update, let you know, hey, the market's probably going to head to the downside, and I didn't want to be right, but you know, this is what we're getting right now. So death cross indicator is definitely holding true right now. This could be a bottom for some time. We could flirt with 20,000 for maybe the whole week. So we'll see what happens with it. But after that, you know, you're pretty much looking for that 18.8, 19 flat range of somewhere where you're going to end up at if you see another significant drop, which is definitely possible at this time period. It's pretty volatile right now. The market's, you know, the crypto fear and greed index is at 28, continuing to go down. Yesterday was about the same. Last week, 27. So it came up slightly 1 point. But guys, I'm continuing to monitor it, and it keeps, you know, slowly going down day after day after day. And it's definitely correlating with the market. So just be careful as right now with your crypto investments. There still might be a chance to get some a little bit cheaper. But in the gist of things, this could be getting pretty close to bottom. Ever since that 17, now if we make a low at 19, 19.8, wherever we hit, that'd be a picture perfect, you know, maybe go a little while, month or two, where we're working our way back up to 25,000, which totally, you know, beat us up pretty bad. That would be best case bullish scenario. But as of right now, we broke the ascending level of support, and we're getting a death cross. So for that reason alone, I'm going to remain just a little bit more bearish here in the short term. Shape, good to see you here in the chat. SL still buying every time it drops. That's good to see, man. A lot of people are in USDT. I'm sure, man. They're probably sitting on the sidelines, but even USDT has me nervous, man. Everything with this market has me nervous right now, especially, you know, I just don't trust it after what happened with Luna. Sup, KC? Hey, you got to do something during the bear markets, man, to get you through it. SHIB looks great. We'll check it out. So that's what we got for Bitcoin right here, guys. I'm expecting an 18.9 bounce to the downside. So we'll see what happens with it overnight. Like I said, I'm expecting to wake up below 20 grand if we cannot hold this. And we'll see what happens. Ethereum currently trading underneath that level. Same right here with Bitcoin at 20,000. We are underneath that 1,500. And that's concerning, you know. That RSI is starting to heat up a little bit. We're getting a little bit of buying pressure here at 1450. So what we can do right here for the short term, we know we can pop that 1450 and leave that line right there, 1450. And then of course you're gonna have 1400, somewhere around 1400, 1375 be your next stopping point. And then after that, you have 1300 flat. So that's your levels to look for Ethereum. Death cross still incoming. Just took a really hard turn with the Fed news off of Jackson Hole meetings. And we're going to play that clip for you here in a few minutes. So let's bust that out. So Ethereum right now, best case scenario, move to the upside, 15.5 to 16. Very possible we could see a turnaround, but the indicators are not showing it right now. RSI is starting to heat up a little bit. Check this out. Let's throw the MACD up there. MACD's just turned to flip red. Yeah, it could stay like that for quite some time. So, yeah, I'm going to still be a little bit more bearish right here, guys. I still think we'll see a little bit lower lows. I think we'll end up somewhere around 13 flat. I think that's going to be pretty close to where we're going to start to see bottom, somewhere around 13 off this dip that we're seeing right now. So might not be a bad opportunity to start picking some up. You know, if we continue to head a little bit lower, you see a break below 1450. That's where I'd really start trying to watch it pretty closely, guys, for some pretty good entry points. Let's talk about Dogecoin, guys, because, you know, we used to stream Doge, and, you know, that's what the channel was about. I just want to make something clear. People forget what happened with Doge and the sheer amount of success that people had when this thing did this, all the way to 74 cents. This, truly in my heart, I do believe is going to happen again, man. I do believe you're going to see Doge at 69 cents, everybody's favorite number. And, you know, sitting from right there, that is a lot of X's times your money. So for that reason alone, Dogecoin, is what I'm buying in this bear market, because when this thing goes to take off again, you are going to be happy that you're holding quite some Dogecoin. It's not going anywhere. Doge community is way too strong, man. It will not go anywhere, I promise you that. What we have here, past 30 minutes, looking bearish, man. Looking the same. Nothing looking strong about the charts right now, so I would wait. Like I said, you got a nice bear flag off the 4-hour chart, so everything's just looking bearish as hell right now. Got a death cross coming in, actually on the 26th, so 2 days ago, or yesterday, death cross on Doge, so that is respecting accordingly. I think you're gonna have a fight for 6 cents here, and if you can't hold that, we're gonna see that 4-cent range in between 6 and 4. You know, there's a big gap between here that we could end up seeing over the next couple of days. So just be prepared, guys. FTM back below 30 cents. I forgot who it was. I think it was somebody was asking me if now was a good time to buy some FTM. I was like, man, I'd wait. I'd kind of hold off. I think the market's going to dip a little bit, and that's exactly what's happening right here. But 6 cents looking promising. We'll probably trend there for a little bit, but we'll see what happens with Bitcoin. You know, if we break this 20,000, which we are riding the line, man, it is super close right here. If we can stay above it, great. That would be key, and that would you know, that pretty much indicate that bottom is in for crypto. But I'm not convinced that we hold it, man. I'm really not. We'll see what happens. Just lots of different increments are going into that judgment to say I don't think we're gonna hold it. And that's honestly my gut feeling. That's the sentiment that I'm gathering from the crypto community itself. So just be careful, guys. Dogecoin not looking too healthy, but I'm telling you, when Dogecoin goes to explode again, you're going to be happy, very happy that you invested. Shiba Inu too. I believe in the meme coins, man. I really do believe in the meme tokens. And Shiba, honestly, looking pretty darn healthy off the charts. Now, of course, you know, when it ripped to 1800, we gave you the indication that, hey, probably take some profits right here. You can always buy back in cheaper. And you're buying back in right now lower than where it was before it pumped. 50% right here. You'd have 50% more of your holdings. Hopefully, if you would have took that advice. But if you didn't, I feel you. Just know next time you see a 50% pump off sheep, hey, you know, maybe get rid of some and try it, man. Don't. Now is not the time to be worried about being left in the dust. That is not going to happen right now. Things aren't just moonshotting for no reason. So, Shiba, nice little pump, and we are. Some could argue, you know, could be still an ascending level of support right here off the 4-hour chart, looking pretty healthy. But the indications that I'm seeing, that 14 is hooking pretty freaking hard right here, and that 50 is coming in for a death cross. So death cross could be a couple of days out if we do get the confirmation for one, which I think we'll start seeing some lower numbers around the 1200 range. Maybe, you know, that 11 flat. So we'll see what happens over the next couple of days, guys. But I am still thinking we see a little bit more downside before we start heading back up. Of course, on the way back up, 13 is going to be pretty good resistance, and then ultimately 1400 is going to be pretty decent resistance too as well. So big picture here, maybe a little wannabe cup and handle forming. You know, we'll see what happens here in the short term, but Shiba is looking stronger than the rest of the cryptos right now. I have to give it to it, man. So one of the best looking charts that we looked for tonight. XRP holding up extremely well too, guys. Broke below that level of support here, but working its way back. Not as bad of a you know, just below it. So I'm gonna leave that line right there, because most of the time you'll have a dip below it, and then you'll come back up to respect it once again and ride that thing up off into the ascending wedge and break to the upside. So I'm gonna leave that for that reason alone. Bitcoin definitely dropped way below our ascending level of support that we popped. So for that reason, I took it down. But there's a very good chance that we have a bear flag here, trade sideways, and then maybe looking at 32 to 30 cent XRP here in the next couple of days. So just be aware of that, guys. We do have a death cross for XRP, so I am expecting maybe some lower lows incoming over the next couple of days. So let me catch up with the chat real quick. SL says time in the market is more important than price. The price always returns to where it's been. Buying till 12K-ish to keep the average close to the spot. Cool, man. And I don't blame you. You know, now's the time when millionaires are made, man. Rodney Smith, appreciate the thumbs up, man. If you guys could please drop a like on the video, man. I'd greatly appreciate it. Be much appreciated. I'm actually going to be out of town for 4 days. I won't be live tomorrow. I'm going to bring some equipment with me, so maybe I can work something out where I can do some live streaming. We'll just have to see. Voyager's enjoying my Doge. They're not going to give it back, huh? I don't think so, Rodney Smith. I will check though, man. I will definitely check, bro. Promise you that. I don't think so though. But I will check as soon as we hop off this live stream. So, how you guys feeling, man? Are y'all bullish? Y'all bearish? You're buying? What's going on right now? I'm gonna pull up Jackson Hole meeting. We're going to listen to kind of what he was talking about today. I don't know if you heard it or not. We'll go over it together. Okay, let me mute this.
Stability is unconditional. It is true that the current high inflation is a global phenomenon, and that many economies around the world face inflation as high or higher than seen here in the United States. It's also true, in my view, that the current high inflation in the United States is the product of strong demand and constrained supply, and that the Fed's tools work principally on aggregate demand. None of this diminishes the Federal Reserve's responsibility to carry out our assigned task of achieving price stability. There is clearly a job to do in moderating demand to better align with supply. We are committed to doing that job. The second lesson is that the public's expectations about future inflation can play an important role in setting the path of inflation over time.
And that's very important because look at what the government just did. They passed student loan forgiveness up to $10,000 if you make underneath a certain amount. And that's off the news of, like, they just went on this big spending spree just as soon as we got inflation finally starting to come down. So I am pretty interested. I'm really looking forward to next month's inflation data, which is going to be coming out in the beginning of September. And I can't wait to see it. But let's continue on with what Mr. Powell was talking about.
Today, by many measures, longer-term inflation expectations appear to remain well anchored. That is broadly true of surveys of households, businesses and forecasters, and of market-based measures as well. But that is not grounds for complacency, with inflation having run well above our goal for some time. If the public expects that inflation will remain low and stable over time, then, absent major shocks, it likely will. Unfortunately, the same is true of expectations of high and volatile inflation. During the 1970s, as inflation climbed, the anticipation of high inflation became entrenched in the economic decision-making of businesses and households. The more inflation rose, the more people came to expect it to remain high, and they built that belief into wage and price decisions. As former Chairman Paul Volcker put it at the height of the Great Inflation in 1979, inflation feeds in part on itself, so part of the job of returning to a more stable and more productive economy must be to break the grip of inflationary expectations. One useful insight into how actual inflation may affect expectations about its future path is based in the concept of rational inattention. When inflation is persistently high, households and businesses must pay close attention and incorporate inflation into their economic decisions. When inflation is low and stable, they are freer to focus their attention elsewhere. Former Chairman Alan Greenspan put it this way: For all practical purposes, price stability means that expected changes in the average price level are small enough and gradual enough that they do not materially enter business and household financial decisions. Of course, inflation has just about everyone's attention right now, which highlights a particular risk.
I'd agree.
Today. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. And that brings me to the third lesson, which is that we must keep at it until the job is done. History shows that the employment costs of bringing down inflation are likely to increase with delay, as high inflation becomes more entrenched in wage and price setting. The successful Volcker disinflation of the early 1980s followed multiple failed attempts to lower inflation over the previous 15 years. A lengthy period of very restrictive monetary policy was ultimately needed to stem high inflation and to start the process of getting inflation down to the low and stable levels that were the norm until the spring of last year. Our aim is to avoid that outcome by acting with resolve now, for market conditions that benefit all. The burdens of high inflation fall heaviest on those who are least able to bear them.
That's me, you, that's everybody. Normal households, normal people, man. That is where the inflation is going to hit you and hit you the hardest.
Restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance.
They're tools, which one of those is going to be raising interest rates month over month over month.
Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions.
Softening.
While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation.
Now, you have to picture this. While this man is speaking, the market starts dipping. And this is not good news, man. This is not what people were expecting him to come out and say, really, in a nutshell, at this meeting.
But a failure to restore price stability would mean far greater pain. The U.S. economy is clearly slowing from the historically high growth rates of 2021.
Recession.
Which reflected the reopening of the economy following the pandemic recession. While the latest economic data have been mixed, in my view, our economy continues to show strong underlying momentum. The labor market is particularly strong, but it is clearly out of balance, with demand for workers substantially exceeding the supply of available workers.
So, how does that make sense? Demand for workers. Let me play that again.
Demand for workers substantially exceeding the supply of available workers.
So, labor market's strong, but it's out of balance. That doesn't make sense to me. But we'll touch base on that here in a few.
Inflation is running well above 2%, and high inflation has continued to spread through the economy. While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down.
Exactly. And what they do, they forgave student loan debt up to $10,000. Not good, man. Definitely not good.
So, we are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%.
2%.
At our most recent meeting in July,
still at 8%.
Raised the target range for the federal funds rate to 2.25% to 2.5%, which
4 times where we're at.
Which is in the summary of economic projections range of estimates of where the federal funds rate is projected to settle in the longer run. In current circumstances, with inflation running far above 2% and the labor market extremely tight, estimates of longer run neutral are not a place to pause or stop. July's increase in the target range was the second 75 basis point increase.
Now, this is where it gets interesting, y'all. I want you to pay attention to this next little segment that he goes on to talk about.
Increase in as many meetings. And
he's referring to the double 75 basis point hike, but listen to this.
Then that another unusually large increase could be appropriate at our next meeting.
Next meeting, next month, could have another large rate hike, dude. And I think we're going to get the big one. I think we're going to start to see the market price it in over the next couple weeks, man. And for that reason alone, I'm super bearish right now, man.
We are now about halfway through the intermeeting period. Our decision at this September meeting will depend on the totality of the incoming data and the evolving outlook.
So basically what he's saying is he's not promising that they're going to do an extra large rate hike, but he's saying it's, unless data changes for next CPI data incoming next month, we're probably facing a full basis point interest rate hike, 1 point.
At some point, as the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases.
But we haven't hit that level yet. Some people are saying, hey, okay, we saw a decrease, so maybe we hit the level. So I wonder if what he's seeing, is, I think what he's thinking is, the amount of spending that the government's doing. I think, especially after we got the good news that it was finally coming down, I think it's going to finally start to head back up. We could be looking at 9% again coming for this month in the next CPI data reports.
Restoring price stability will likely require maintaining a restrictive policy stance for some time.
It's going to take a while to get goods back to normal.
Strongly against prematurely loosening policy. Committee participants' most recent individual projections from the June SEP showed the median federal funds rate running slightly below 4% through the end of 2023. Participants will update their projections at the September meeting. Our monetary policy deliberations and decisions build on what we've learned about inflation dynamics, both from the high and volatile inflation of the 1970s and 1980s, and from the low and stable inflation of the last quarter century. And in particular, we're drawing on 3 important lessons that I'll highlight. The first lesson is
that's pretty much where we were. I just wanted to pull that back for y'all so y'all could hear that substantial rate hike, which they are probably going to come with even higher than 75 basis point next month. Give me 1 second. Let me get the music back up. Turn it down. Didn't mean to bore y'all with that. I just wanted y'all to hear that. So give me 1 second. Let me get this set up. Rodney Smith, what will higher interest rates do for the cost of living? Quite a few things, my friend. Basically, the main thing is higher interest rates, they have various economic effects, which increases the cost of borrowing money, which, squeezes the economy, because people aren't going to be going out buying houses. It slows the growth of the economy. And, prices will go up, man. You want to go buy a house? Look at your interest rates. Everyday living, it's just the cost of everything. Inflation, man. It's the price of gas. Look at it, bro. Those big 18-wheelers that bring the food to your supermarket, that's why your prices are going up. So everything it all kind of plays in together. But the main effect of the interest rates is, it tightens up it's harder to borrow money. Money was way cheaper in 2021. It was just super cheap. Now money's getting more expensive, and it's the cost to borrow has went up. Interest rate goes up. People aren't really taking out loans. Big companies aren't taking out that big loan they were looking for. So everything kind of tightens up, man. So SL says, I'm so bearish, I'm bullish for the long term. I am too, man, absolutely. I'm DCAing on Gala and SLP. I love Gala, bro. Where's Gala at? .1% up today, 5 cents. Not looking bad, man. Where's Jasmine at? That's up almost 1%. Man, Jasmine took a little beating. So sorry about that, Rick. I am watching it daily. I was hoping we would get that break and get some relief, man, but it's not looking too hot right now in the markets. But Bitcoin price briefly loses 20K on a punch of nothing Powell's speech. Bitcoin could sink below the 20K mark again. Traders warn the price targets now as low as 16,000, which that would be pretty alarming, guys, if we do see that for Bitcoin. This is an article I'm gonna pull up. It was a pretty good read, so I'm gonna go ahead and read it to y'all. And we'll go up and pull up the 1 minute chart for right now. All right, what's up, Ernesto? Good to see you, bro. Jackson Hole not treating us too well. But Bitcoin BTC analysts were keen to draw fresh price targets on August 27th after the largest cryptocurrency briefly fell below 20K. Data from Cointelegraph Markets Pro and TradingView showed BTC hitting 19,945 on Bitstamp the night before the hawkish comments from the United States Federal Reserve. Intraday losses, let me change that up real quick, sorry. So intraday losses of the pair near 9% in the United States. Equities cratered over the outlook of inflation policy, which looks to increasingly abandon the soft landing narrative. Restoring price stability will take some time and require using our tools forcefully to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below trend growth. Keyword for that would be recession, but they never officially announced it. Jerome Powell said in a speech that at the annual Jackson Hole Economic Conference. Moreover, there likely be some softening of labor and market conditions, while higher interest rates, slower growth, and softer labor markets conditions will bring down inflation, and they will also bring some pain to households and businesses. There are uncomfortable costs of reducing inflation, but a failure to restore price stability would mean far greater pain. Adding that quantitative tightening, known as QT, could remain for some time. Powell sparked a majority volatility spike to the downside across risk assets, which is crypto in a nutshell, man. It trades as a risk asset. Even right now, excuse me, Bitcoin's breaking below 20,000. As we speak, breaking below 20,000. Not a good sign, man. But as Cointelegraph reported, U.S. stocks lost a combined $1.25 trillion in a single session, more than the entire crypto market cap. Bitcoin managed to regain 20,000 on the day, but we are currently breaking below that right now. For traders, it was now a question of a relief bounce followed potentially by even heavier losses. So bear market bounce, and a lot of analysts are predicting that we're going to see heavier losses here in the short term. BTC went lower than expected. But the idea is still the same. First up to liquidate late shorts, then down. Popular Twitter account Capo of Crypto told followers in the first several updates on the day. Continuing, Capo of Crypto painted short-term relief targets between 23,000 and 23,500, but to the downside, 19 and 16,000 were now in play, which I would have to agree, man. I think we're going to land somewhere between 19 and 16. He goes on to say his main target is 16,000, support 19K, breaks below that. Here it goes straight to new lows, which I would have to argue 18.9, man. I'd have to disagree with him, but that's my personal opinion. But others eyed the potential of increasing BTC accumulation should be 20K be violated as support again. But we are breaking down pretty nicely right here. Break below 19.74. We're going to go on a bit of a dip, guys. So let's see what happens here tonight. Meanwhile, key trend lines figuring in prior bull markets were now back overhead for BTC. These include the realized price of 21.7, the 200-week moving average at close to 23,000, moving higher resistance 21.1 and support of 19,850. See, that's where I was looking, 19,850, followed by 19.2. But they go on to say DXY wakes up last minute on Fed cues as stock market tumbled. Meanwhile, the familiar face of the US dollar came back to haunt the crypto markets. US DXY index initially seeing a heavy downside rebound to levels which again put it in striking range of 20-year highs. At the end of the August 26th, DXY stood around just under 108, up from the lows of 107 within a matter of hours. Fed saying the course means DXY maintains its trend, which means asset trends down more. Investors and entrepreneurs across the board pointed Twitter followers to the inverse correlation between DXY and BTC as an ongoing top and bottom indicator. You're both accumulating Bitcoin as bear. Keep an eye on DXY. All major bottoms in BTC have coincided with the local tops of DXY. He noted alongside the charts from the trading platform Stock Monkey Lizard. So that's definitely a good indicator. I'm gonna actually save this picture. I'll post it in Discord for y'all just to give you indication of what's going on there. But storage rendering will be very important. Absolutely. Dufo, what's up, man? Hopefully you're doing well. Good to see you, bro. Any thoughts on both a TA analysis and overall project of SCUST? I can pull it up for you real quick, man. Strong sale candidate. I wouldn't touch it, man. That's just me personally. If you're trading it, I wish you the best, but I wouldn't touch it, man. I would stay closer to some of your mainstream cryptos. But let me tweet that out real quick. All right, cool. I had to tweet that out, guys. Guys, just be prepared. We're probably going to see some more pain, some more downside, and it could come in the form of tonight. So just be aware what's going on. We are taking a pretty good dip here, 19.73. We had that bounce right there, but double bottom little action happening here off the 1 minute, 5 minute chart. Still looking all right. Could be bouncing here shortly, but what worries me is now we're going to treat 20K as resistance. So just be careful with it, guys, and just know that we got you back over here at Matt's Market. We'll keep you guys updated. Those are the levels where I think Bitcoin and Ethereum are heading here in the short term, and you know, hopefully we start to see some relief. But I think heading into tonight, I think I'll wake up to Bitcoin below 20K. So we'll see what happens. But if y'all guys are in Discord, hit me up in the morning. We'll see where we're currently at. I know my camera's all messed up. I didn't even really try to mess with it tonight. So sorry about that. I will be on the road for the next 3 or 4 nights. So I will try to bring some stuff with me so I can live stream. So I will try my best to keep you guys up to date with the latest and greatest information. So with that being said, guys, if you got any questions, feel free to hit me up in Discord or on Twitter. And I will see each and every one of y'all here tomorrow night. Thank y'all for hosting the show. If you could, please hit that like button. If you're brand new to the channel, please consider hitting that subscribe button. So